Bismillah. All right, I'm gonna start off with. Gonna try to make this maybe 20-25 minutes long. I'm a little bit congested, so pardon me if I sound like I'm mouth breathing. It's not my thing. But anyway, 7 fundamentals to one good trade. I'm gonna like emphasize this as part of the routine, the daily routine prior to taking on the trade, to actually fill these out, like have something for each one of these, at least not just thinking it out, but literally documenting these, regardless if it's a day trade or a scalp. Because let's face it, sometimes you may see price moving and you just want to jump into the trade, and you'll convince yourself that you have a setup and you didn't do your homework properly. And again, sometimes you win, sometimes you lose. And really, this is a odds. This is a game of statistics, game of probability. So you want to be as consistent as possible in order to not skew your data, right? You know, you may win trades. That don't mean you know how to trade, right? It's good for you, right? But if you're not looking for longevity, carry on. If you are, then obviously you need to have a routine, a system in place to protect your business, right? Anyway, proper preparation, hard work, as I would say, have a narrative, have a storyline for what you're looking at, and you know, where's price coming from, where's it going, and you know, try to identify your edge in the market, whatever that is. Have patience upon adhering to these fundamentals, and always have a detailed trading plan, an elevator pitch. In general, elevator pitches are like 60 seconds long. Elevator pitches are 60 seconds long, and with that, you should know your entry, your stop loss, and your target objectives. And part of that, or at least my style of trading, is knowing, all right, price ran sell side, price broke market structure, price retrace into an imbalance. That's all part of what I'm looking for, right? Specific targets, specific entry points, and well-defined protective stops. Anyway, you need discipline to adhere to those rules, and you need to kind of journal daily and convey those ideals that you have with other traders. Ideally, it's not for everyone, but if it's for you, it benefits you, then you should be doing it. You never know until you try, right? It's also good to have someone, not while you're in the trade, but someone to play devil's advocate with. Maybe they see the same thing you see. I mean, don't have like the bandwagon appeal where you just jumping on trades because someone else is taking it. But ideally, you want to see your edge in the market and take those opportunities when they present themselves. All right. And you want to replay your most important trades, or replay your trade setups, replay trading opportunities, the ones you took and the ones you didn't take, just to kind of build up your recognition skills. All right. Anyway, economic news calendar. There was 8:30 high impact news. Also, the Fed's FOMC speaker Barkin. Hopefully, I'm pronouncing his name properly. In the 30-year bond auction at 101. Well, let's move forward. This is the dollar for hour and the 15-minute. What do we have here? Just gonna stick to this. Let's just clean this up a little. Obviously, other than like the trades I like considered, I'm largely looking at price action like fresh, like right here, right now, right in general. I don't sit at the computer all day and observe the market. I would love to, but that's not how the game is played. The more that you are like tapped in, the more you're gonna see setups and everything else that may or may not be there. So you need to keep your wits about you and not sabotage yourself. So inverted fair value gap, and as we know, I prefer inverted fair value gaps. There's a bearish fair value gap here, and you have a bullish fair value gap here. However you want to play it, right? So there's that. Green, make that green, right? All right. Come over here. This is the 12 o'clock line. And we can see that we opened up inside the previous day's range. Tight range, relatively tight range. And from the low of the range to the high of the range. Right? So I chose here. And I chose here. Then you have the weekly open, new week opening gap opening here. And you can see that's using that range. We have an entry here. So you have we run down, breaking market structure. You have a run on sell side. Breaking market structure here. Let's take that out. Breaking market structure, retrace into a fair value gap. So we have an entry. And this is just to highlight the different. It's the same setup every time. So we have that. Also, we see a little bullish fair value gap here. Besides using the so that's gonna highlight it, and then I'm gonna delete it because we don't need it, right? We got the new week opening for it, but we can see that price held above the consequent encroachment of this 4-hour fair value gap, and then it took off. But we have an entry here on the 15-minute optimal trade entry long. Either using this full range entry or fine tuning it to this. Let's do this. Take that off. Take that off. Okay. Okay. So we actually have multiple opportunities, multiple optimal trade entries. Here's one off that fair value gap we just discussed. Here's another break in market structure. All right, run on sell side, same. Again, run on sell side here. Rally, break in market structure, retrace into an imbalance here or here. All right, let's. And there you go. There's your entry, long here. Could tighten it up. This is the most dynamic. Well, they both pretty good. So you can leave it here or use here. It's definitely a tighter stop. And 1.5 standard deviations here. 1.27 standard deviations here. And using that previous range would be 4 4 standard deviations. That's if you got in during the London session. Anywhere during the London session. All right, so here we have price stabbing through. You got an order block here. You have a breaker here. Anyway, you have, so let's say you're here. This is why you don't really want to jump around different time frames, because you're gonna start seeing what you want to see, right? You're gonna start seeing what you want to see. All right, here you have price stabbing into consequent encroachment of this 4-hour inverted fair value gap. Stab down into this fair value gap and this mitigation block. We're not going to discuss that. And this, all right, we don't need to discuss it, right? You have it stabbing down into here. That's not a sell signal, and based on the model, right? Based on the model, it's not a sell system, not a sell model here. Here we have a break in market structure, pull down. So we have a run on sell stops. We have a market structure shift. We have a retrace into a fair value gap. Here is your real entry. Now, because price reached up into here and showed signs of weakness, then yeah, you could short from up here. But it's high risk. It's more riskier, right? Because price certainly can continue running. However, you do have this climax bull bar here, uncharacteristic bar based on everybody else, right? Based on the other candlesticks, this is uncharacteristic. Likewise, this is kind of uncharacteristic as well. You can kind of go inside bar, outside bar. You kind of anticipate. You don't have to do that though, but you don't have to abandon the ways you see price action just because someone else sees it another way. But you need to be consistent. So anyway, the model is here. I'm gonna just highlight it. That's because it is. So again, that's the run on buy stops. Here is your market structure shift right here, and your retracement is here into this that bearish fair value gap. But just so yeah, right, here's your short internal liquidity targeting this 4-hour fair value gap, stabbing into this 15-minute fair value gap and showing signs that it wants to possibly go higher. And you have a gap up at right here. Anyway, that's the dollar, and the dollar was pretty much bullish for most of the day until about 9 o'clock. Then we have a short for the remainder of the day and consolidation. All right, let's go to the ES. ES, I highlighted a 4-hour fair value gap, and price is just dancing along the top of it, right? Stabbed inside the wick, dancing along the top, not really doing much, clearly, right? So which means that either don't trade or you're in scalper mode, right? And then trades within the range, within this tight range. They have a break outside the range, pull back into the range. So, so this is that 4-hour fair value gap. Here is a 15-minute fair value gap that I drew out, bullish fair value gap. We have the previous day's high. This is the range, right? Between this and that. All right, so a little spooky, right? But held inside of that 15-minute fair value gap. Ran the Asia high, ran the Asia lows, retrace into, when I say ran the Asia highs, breaking market structure, and then retrace into a bearish fair value gap into this 15-minute bullish fair value gap. There you have it. So that's one setup. Here you have a run into, you may say, this, you can say it traded into the wick, or you can say it traded back inside of this 15-minute fair value gap, which is internal range liquidity. You have here, we trace back down into here. You have a breaking market structure of this candle, of this swing high, of this swing high, of this swing high. And you have a bearish fair value gap, sending price back down. And you have this here. It's an inverted fair value gap. Probably wouldn't have taken that until here or here. But it's just choppy. So again, as you mentioned, this is the range. 15 minutes. We can go down to a 5-minute here. Look for opportunities, being that the range is so small. Right? Because that is the protocol, right? So you have here internal range liquidity, breaking market structure, retrace down into this volume imbalance, and take off into this bullish fair value gap, and it took out almost took out the London high. Didn't do it into here though. Pull it back down into these blue lines is what I used earlier. Let me see. That is, I mean, when you trade and you grab what you can grab, I guess grab two horizontal lines and drew it out. But that's this fair value gap here. And I think I took this trade here. But anyway, this is just like, right? Why would you trade that? I take my trades ideally most of the time before 8:30. Anyway, let's see the theory, yesterday's theory of market maker sell model at, so we have a run above these highs, run above this high here, have a breaking market structure here. It's not really clear until price breaks below here. Is it so price breaks here, then you have a retrace into during the last 15 minutes of the market. All right, so you have consolidation, accumulation macro here. That's exactly what it did. Accumulated, you had to breaking market structure, and then retrace into this bearish fair value gap, and here's your short. So that is looking like it could be a model, right? Obviously, I don't want to say too much, but anyway, let's move on in Q. How long has this been going? Oh, almost time's up. In Q, run on buy side. Here's your break in market structure. All here into all this internal range liquidity. We have a retrace. Don't really have this is not like really solid entries for me. I wouldn't. Everything is like, there's no real gaps here. You have like volume imbalances, but you can take it. There's other ways to get into these trades, but again, this is a tight range. This was a better trade. Look at that. What we got here? 4 hours. That's definitely not a 4-hour gap. That is. Alhamdulillah. All right. Well, here we have a 4-hour fair value gap. You have price running the previous day's high eventually. Anyway, open up and then the upper range of the previous day. And you have this swing low. Then technically this swing high, or this one. Again, we always looking for a discount to premium. So this is the reason why I'm usually drawing these fibs out. So here to here, this is the current range, and price opens up during the AM session. And again, I kind of go from 7 to 11 anyway. All right, so you have this imbalance here. Price traded down into it. Let's see. All right, so price ran the Asia high, breaking market structure of here, snap down, retraced, and here's your inverted fair value gap here, or there's a small one here, right here, and here. And this is a 15-minute time frame. So here's your short 1, 2, 3 pattern, right? Here's your break and market structure. Here's your retrace into this tiny fair value gap here, and that's your entry long. So we have one short, one long here using the model. All right, if you didn't like that tiny one, you could use this inverted fair value gap here. And yep, so there you go, targeting the London session high and the Asia. Well, this is the New York PM session high. Asia session high was already ran here. And then targeting the previous day AM session high. And that's optimal trade entry as well. All right, so anyway, that satisfies my my homework, my routine. Deuces.